All right, good afternoon, traders. Today is March 30th, 2026. Just one more day left in this month, then we start off with April. By the way, just want to let everybody know, open house in the BYOB Trading Room. That happens on Monday and Tuesday after Easter. Easter is this Sunday. Good Friday is this Friday. The markets are closed this Friday, so we are not going to be here in the trading room. So, in this Thursday, we will have members e-learning on Thursday. That starts at noon, and that will be inside the combo room. All right, so let's go ahead and get started. How I made like 2,400 with a 64K account. Let's take a peek at the markets today. All right, so my instructions this morning, wow, they were way off base. Okay, so I plan to trade a 10-minute uptrend to 640, 645, 648 based on the GEX, but of course I didn't have the complete data. Anyways, we had a 10-minute uptrend coming into the open. I wanted to trade that. You can see it fell apart right there, so I never took it. I took like 1, 2, maybe 3 calls, and that's it. I waited for the uptrend to resume, and it never resumed. So all I caught this morning was a small piece of that right here. Okay, actually only caught these 3 candles of the downtrend. And then from there, all right, we had a red erases green right here underneath the bottom of this, right? You had a red erases green right there. Okay, so red erases green right there. That was the post-market from Friday, or the pre-market from today. Well, pre-market, post-market had a red erases green. I entered right there. Like I said, I only caught the first 3 candles. And then I entered right here on a 10-minute downtrend. And you can see on the 5, you got the 3 and the candlesticks plotting underneath the falling 8, underneath the falling 17 there, okay? Again, picture of money, all right? So you had a red erases green there, and then you had another red erases green right here that you could have entered in, and then there was another red erases green right here, okay? Both 2, 3 red erases greens right there, all right, to trade. So got a 10-minute downtrend under VWAP. I traded that, mostly puts, and then I took my calls and converted them into bear call credit spreads and captured enough premium, to cover the loss on the calls. So there's a SPY on the 5-minute. You get the sticks and the 3 plotting underneath the 8. 8's falling. Again, you can see the 17 EMA, all right, and the VWAP line, that's the mouth, just keeps getting wider and wider and wider. Right there, wider and wider. Okay, that's the picture of money right there. If you don't know what a picture of money looks like, that's what it looks like right there. When you see that mouth get wider and wider between VWAP and that moving average, the 17 or the 8 EMA, if it gets wider and wider like that, it keeps dropping down or rising up, that's the picture of money. If you looked on the PPO on the 10-minute, I think we had the right numbers on the PPO. Go to the 10-minute chart. You're looking for 0.06 or better. You can see we had 0.06 right. We had 0.05. We got 0.06 right here, right on that candle that shoots into gap fill. Okay, so you got 0.06 or better right there. Actually got 0.08. Okay, so there's your confirmation of your 10-minute downtrend and your momentum. All right, see the momentum, how it carries. As long as it stays underneath that 9 EMA, I'm on the 10-minute chart. I'm on the PPO. It's a 813 PPO with a 9 EMA on it. Okay, so you want You want those candles to be dipping lower and lower underneath that 9 EMA, and you want them to be 0.06 or better. You can see right here it's 0.06. Didn't get there till the last one, but then you started out right here, right after the gap fill. All of this was tradable to the downside, right into what happens to be it was N1. It was N1, which was negative gamma 1. If you look at it with the GEX gamma exposure, this was N1 was 630 right here, and that's what we were looking for, was price to come all the way back to N1 right here. So that's what we were. That was our target for the downside. I was kind of hoping for a little bit more. Didn't really materialize. Maybe we get some more tomorrow. We'll find out. All right. We'll see what the evening session does. They could dip it all the way down to 620 and rip it all the way back and steal the thunder from us tomorrow. So we'll find out what happens tonight. So anyways, I traded those puts down into there. And then you had the PPO to confirm that downtrend, as well as you've got, the 3 EMA and the 8 EMA are pointed down. Okay, you can see, let me just move this down a little bit. Okay, you can see the 3 EMA and the 8 EMA are pointed down. And you can see the mouth right here between the 8 EMA and the VWAP just keeps getting bigger and bigger and bigger. Again, that's the picture of money. So coming into the close, we got a one candle pinch. I'm just going to call it bearish consolidation. I'm not going to call it an uptrend because it's certainly not an uptrend. I'm not going to call it a downtrend because the 10-minute just got pinched off. So I'm just going to call it bearish consolidation on the 10-minute chart coming into the close. Okay, I'm going to squeeze off the PPO because we don't need it right now. I'm going to push this up a little bit, get a bigger picture. So there was the 10-minute uptrend that I wanted to trade this morning, and you can see it completely fell apart on the first 10-minute candle, not being able to maintain over the 8 EMA. All right, so I flipped the puts right there. All right, let's take a look at the 2-hour chart. Again, you can see a continuation of the 2-hour downtrend. You got the sticks and the 3 EMA, which is the yellow line, plotting underneath the falling 8. Okay, so you've got 2-hour downtrend. You've got daylight between the 3 EMA and the 8 EMA. So you've got a 2-hour downtrend. Go back to the 10. See how there's no daylight there? They pinched it off. Okay, so on the 2-hour, you still got a 2-hour downtrend coming into the close. I thought we would see kind of like exhaustion or capitulation. Didn't get either one, which tells me there may be a target lower that they're going after. Hopefully they don't give that opportunity up to the Asian, the European markets. I'd certainly like to trade that here. On the daily candle, okay, we got a lower high, a lower low. We closed under a bearish trap underneath the falling 17. That's these red dots. Okay, we're not still not in the lower third. The lower third is 626 or 627 right there. It's actually 626 because I just adjusted it today. So it's 626. We're still above it, not by much, by about $4. Okay, so we're still bullish. If I put the quad lines on there, okay, I can crank up the quad lines. You can see them. Okay, so there's the quad lines. So we're still in the upper third. We're still bullish. But you can see clearly we're making lower highs and lower lows. So we're in a downtrend. All right. So it's nice to be bullish, but kind of got to be in an uptrend. All right. If you want to maintain that status. They go any further down here, they're going to be in neutral land. We'll see what happens. Okay. So there's SPY on the daily chart. Again, bullish, but definitely in a downtrend. Let's take a look at the weekly chart. Again, here's the origin of the move. Back here in April, we're up. Make a new all-time high up there, or several new all-time highs along the way. pullback. We're still in the bullish territory, but we made lower lows, so we're in a downtrend on the weekly as well, on the monthly. Okay, again, here's the origin of the move back here in April, up, over, and we're still bullish, and we're still in an uptrend. We haven't made any lower lows. Okay, let's take a look at QQQ. Excuse me. 10-minute, I'm going to call it bearish consolidation right through here. Okay, bearish consolidation simply because it's not enough to be an uptrend, and they pinched it off, so there's definitely no downtrend. So I'm just going to call it bearish consolidation on the 10-minute chart. Let's try this one more time. Okay, bearish consolidation right there. And then on 2-hour chart, you got the sticks and the 3. Okay, candlesticks and the 3 plotting underneath the falling 8. Okay, and you got daylight between the 3 and the 8. 2-hour downtrend, you know, falling underneath the 17. 2-hour downtrend coming into the close. Okay, on the QQQ. Now there's the 33 right there. They closed underneath, so they're neutral, no longer bullish. They're going to be neutral because they closed underneath this 33. The upper third is bullish. The middle third is neutral. They're in the middle third right now. SPY didn't quite make it there today. So there's QQQ on the 2-hour. Daily chart, lower high, lower low, closing under a bearish trap, under the falling 17, under the all-time high anchored BYOB in the middle, so neutral, and still making lower highs and lower lows, so still in a downtrend. Let's take a look at weekly chart. Weekly chart is starts here in April. Weekly chart starts here in April, rallies up, makes some new all-time highs. And you can see they got a low here. They made a lower low. So they're in a downtrend for making lower lows. And they're no longer bullish. So they're neutral and in a downtrend. Now, let me just say this. The bulls could come in tomorrow and rescue the price action. And we could be bullish again tomorrow. We'll see what happens. All right, but to change the downtrend from an uptrend, that's going to take a lot of work. That's going to require them to make a higher high, and that's first place you come to up here is probably you have to get up over 620, 618 to start making higher highs up there. Okay, so that's QQQ. Monthly chart, you can see right here, origin of the move, April, up, over. We have not made lower lows, all right, on the monthly time frame. So we're still in an uptrend. You can see all those green dots, all right? So we're still in an uptrend, and we're still bullish up. We're neutral, all right? We're neutral because we're in the middle third right there. So here's QQQ. Let's take a look at IWM. Pick it up on the daily chart. I'm going to pan out. IWM, you can see right here is the 33rd, the upper third. So they closed in it. They made a lower high and a lower low. Yep, lower high, lower low. They closed under a bearish trap. They closed under the falling 17. They closed down here. They closed under this all-time high anchored VWAP. That's the pink line. They closed under quadrant 4, but they're still in the upper third, so they're bullish. But you can see clearly there's a high, there's a lower high, there's a low. They made lower lows, so in a downtrend. So bullish, just barely, but in a downtrend on IWM. Diamond Dow. Diamond Dow no longer in the upper third. Right up here. You can see it faintly right there. Looks like an inside day. We'll find out in a second. The low, 450.49. The low, 450.44. Lower high, lower low. Closing under a bearish trap. Under the falling 17, see that? Closing under the all-time high anchored VWAP. That's the pink line. All right, no longer in the upper third, so neutral and making lower highs and lower lows and in a downtrend for Diamond Dow. Stinker. Stinker got a lower high, lower low, closing underneath bearish trap, closing underneath falling 17, closing underneath all-time high anchored VWAP, closing underneath the midpoint That would be the 50-yard line right there. Bulls would have control over here. Bears down here. So they're bearish. They're in quadrant 1. So they're bearish. And you can see a high. There's a lower high. There's a low. They made a lower low. Bearish and in a downtrend on stinker on the daily chart. This is the all-time low. That's the all-time high. So bearish and in a downtrend. Okay, so let's take a look at silver and gold. Silver today, yes, FNGU is a mess, yes. Silver and gold, we got higher low, higher high. We closed inside of a bearish trap, under the falling 17, under the all-time high anchored VWAP. This is silver. We're neutral, all right, but we're in a downtrend still because we're making lower highs and lower lows. We're just hanging up on this 50-yard line. Bulls and bears giving it a fight right here, right at the line of scrimmage, trying to find out who wants control of the game ball. So there's silver, neutral, and in a downtrend. There's the all-time high. Okay, this is the 2022 low. So you can see this is the origin of the move up there to the all-time high. See that exhaustion up there? That's what we were looking for today on the reverse side for the SPY. We didn't quite get that. See that big wick? And then if you took these candles and you compress the price action of these candles up here together, what you get is a big wick. If you look at it on a weekly, see that? See that big wick? Okay, so we were looking for something like that today. We did not get what we were looking for. So there may be more downside. I didn't see any exhaustion, capitulation type move. So maybe more downside for SPY. We'll see. Overnight, they could deliver the goods overnight and steal it from us. All right, so there's silver, neutral. All right, but in a downtrend. Let's take a look at gold. Gold on the daily chart, of course. Higher low, higher high, closing inside a bearish trap, under the falling 17, under the all-time high anchored VWAP. Let's pan way out so you can see we're up there near quadrant 4. Here's the origin of the move, 2022, back here. That's the all-time high. Now you can see gold is right up here in the upper third, not in quadrant 4, but in the upper third. So that's bullish, but you can clearly see lower highs and lower lows. So we're in a downtrend. And we're underneath this all-time high anchored VWAP. We're underneath the falling 17. We are bullish, but we're not acting bullish. Okay, so we're from bullish descent, but we're not acting bullish. Okay, because we're in a downtrend. So there's gold. Let's take a look at USO. Okay, USO has my permission to go to 187. That's my target up there. Okay, so higher low, higher high, closing over a bullish trap, over the rising 17. That's those green dots. Closing over this 4-year high anchored VWAP. That's the pink line right here. Okay, this was the post-COVID high. So after COVID came in, the market rallied back. Well, that was the high produced from the market rallying back. So this is the post-COVID high anchored VWAP. All right. So then we've got up here, you can see we're at the top of quadrant 4. We're obviously bullish. All right. And you can see we got some highs. We're making higher highs. We got some lows. We're making higher lows. So we're in an uptrend. Bullish and in an uptrend on USO. UNG, quite the opposite today. UNG, lower high, lower low, and giving us the upside, the sword that sticks straight up, okay? When you see that, that's kind of like the big middle finger, all right? Whenever you see the sword stick straight up, it usually means price going up and rolling away over, okay? We'll see, all right? The only way to negate that is to see price take out the tip of the sword. All right. In other words, file the tip. All right. So price lower high, lower low, closing under a bearish trap, under the flat 17. That's these dots right here. this is underneath a 12-month high anchored VWAP, not a very big bar that we set for UNG, okay? See, 12-month high. We're all the way down here in quadrant 1, so we're bearish, okay? Zoom out again one more time. This is quadrant 4, quadrant 3, 2, we're in 1. If you want to be bullish, it's up here. This is bearish. And you can see we're making lower highs right here. There's a high. It's a lower high. And we're making lower lows, so we're in a downtrend. That's UNG on the daily chart. Let's take a look at technicals, T2101. Now recently, Friday, okay, you can see the market kind of melted off Friday, and we lost participation. Kind of melted off again today, and really didn't gain any participation. So it's kind of a bullish sign in that people aren't piling on while the market's dipping back in this bull flag, or from this rally that we just had. So there's T2101. So not much piling on to the price action as it dips lower and lower day after day. T2101. Usually what you get is an increased selling occur because everybody's running for the exits. A little bit different crowd right now. Okay, so that's kind of a bullish sign for me. Let's take a look at T2122. All right, so you can see if we look at T2122 and we look at this continuous yellow line, you can see in the last month of March, okay, it spent the majority of the time below the 50-yard line. Okay, so that's bearish. All of this is bearish down here under the 50. If it was bullish, it'd be up here. And you can see every time we got up there, well, the bears knocked us back down. We got up and we got knocked down. You know, we get up again and we get knocked down. We get up again and we got knocked down. Okay, so you know the song. All right, so we spent the whole day, all right, between the seller's chop zone, the sell zone, and the oversold zone. Okay, so bears obviously still in control. All right, we're making lower lows. We're in the oversold zone. We're spending much of our time underneath the 50-yard line, which is the midpoint. This would represent bullish price action. This would be bearish. You can see the majority of March has been nothing but bearish price action or bearish control. Bearish control is what I'll say. Okay, because that continuous yellow line spends most of its time underneath that. Let's take a look at T2123. And we went off and set another new low. All right, so from the all-time high way up here, put the quad lines in there. So this is our all-time high, and we're still pulling back. All right, we have not. Usually these pullbacks have an end. All right. And this one does not seem to have an end. It's been going on, well, since March 2nd. Right here, it's been nothing but pulling back. So we're at the bottom of quadrant 1. This is the 15-minute T2123. That's bearish down there. Okay, and obviously you're making lower highs. You're making lower lows. So you're in a downtrend. And you're under the falling 200 SMA. Not my favorite place to be unless you're a bear. Okay, so that's T2123, 15-minute chart, bearish and in a downtrend on the 15-minute chart. 3-bar chart, a little bit different, Here's the all-time high for 2024. That's for T2123. Okay, and we pull back, and then we begin our April rally right here. See, April goes up, we rally, and we make. That was the all-time high. We make a new all-time high right there. Pull back, make a higher low, rally up over the 200, hold the higher ground, rip, and make another new all-time high for 2026. So 2024, 2025, 2026 right there. Okay, since we've made that new all-time high in 2026, 3-bar chart has been in trouble. making it consistent, lower highs and lower lows, just kind of melting off, just giving it all up. Like there's no more spinach left in the tank, okay? No more gas in the tank. Got price action underneath the rising 200, not my favorite place to be unless I'm a bear. Currently, kind of bearish until I see the bulls show up. Currently, this is 3-bar chart. We're at the top of we're at the bottom of quadrant 4, all right? Remember, the upper third is bullish, so we're still bullish, but clearly in a downtrend and not acting bullish, all right? So, you see what I'm saying here? T21, that's a 3-bar chart. Okay? Bullish, but in a downtrend and not acting bullish. Okay, let's take a look at Stinker on the 15. Stinker on the 15, remember Friday they had a bearish gap down, never filled by the bulls. Look at all these red dots. Okay, it's pretty clear to me that Stinker on the 15, there's a falling 200 SMA. We're underneath it. Again, not my favorite place to be unless you're a bear. Currently, I'm a bear till the bulls show up. All right, and then we got price action. You've got lower lows. We keep making lower lows and lower highs. So we're in a downtrend. So from the all-time high way back here, I don't even think it stretches that far. If I put the quadrant lines all the way in, you can see we're at the bottom of quadrant 1. That's bearish. You can see we're making lower highs and lower lows. That's a downtrend. You can see we're under the falling 200. That's bearish. We're under the all-time high anchored VWAP. That's neutral. But clearly on the 15 for Stinker, bearish and in a downtrend right there for Stinker. Take a look at, let's look at the U.S. dollar index. Okay, U.S. dollar index trying to stage a rally and break out of this bear flag. Here's the 2025 high. From there, we started a daily downtrend, making a series of lower highs and lower lows. And then we produced a 6-month bear flag right here. Maybe even longer than that, maybe an 8-month bear flag. Trying unsuccessfully to break out of the top of the bear flag. See, what we did was we broke all of these valleys make up major support. Okay, so once we got below those valleys, now they all become resistance. So it's been quite a tough time for price to break through the resistance and make it up here and hold the higher ground. You can see they got up here and they were rejected. There's a double rejection right here and here. Okay, couldn't get over the 200 on that one. Finally over the 200, got rejected, pulled back. We got a hook right here, maybe a catch on the 200 SMA right there. Could be a catch, and you can see we're back up there. Now we're back over the 200 SMA, over the top side of the bear flag. So we'll see if they can hold that higher ground, or are they going to give it up again. So U.S. dollar index in a daily uptrend because there's a high, there's a higher high, there's a low, there's a higher low, and here's some more higher lows. So we're in an uptrend currently on the U.S. dollar index right there. All right, traders, that's it for me. All right, if you want to, I just traded puts. Remember, I showed you what I traded on the puts. Let me go back over here to SPY. Okay. I'm going to turn the trading on. Oh, it's already on. Okay, so puts. Right here's the puts. Okay, so every one of these blue dots was a buy of contracts. The red dots were sells. So I bought, sold into strength. Okay, I reloaded my puts, sold into strength. Reloaded my puts and sold into strength. Reloaded my puts, sold into strength. Sold into strength. Reloaded, sold into strength. Reloaded, sold into strength. Right there. So just traded puts all day long. Right there. These others were calls. That was a call spread. You can see I was able to generate a profit from the call spread, selling the strike that's underneath the short strike. I sold this strike, went along this strike, so I came up with a loss on that one, but a gain on that one. This again, I sold. These were kind of like covered calls or short strikes against my long strikes, and I actually captured some profit on this dip down right here, and I sold those to make some profit. So that's basically how I made my 2,400 today. All right, that's it for me, traders. I'll see you all. I did put in some bids for Hormel. I'll go over Hormel, HRL. Hormel, I kind of like what's going on this 30-minute chart. I see a bullish inverse head and shoulders. If they can just get over that neckline right there. Okay, so this is the head, right shoulder, left shoulder. We could go all the way back up to see that breakdown candle high right there. That would be my target, one of my targets, as well as this uptrend line, the backside of that. Okay, so Hormel looking good with the. I put in a bid for some calls. So I have some calls for Hormel. Let me see which ones I got. I'll just put them up there. Okay, so I got the 172 days till expiration, and they are the 20 strikes. So right there. So I got filled for 2 contracts right here for Hormel. 1 here, 1 there. That's it. Other than that, I still have FLNG. Okay, this is a long-term play on natural gas. All right, so you can see, or liquefied natural gas. Okay, so I've got 6 long contracts there. You can see we're in this bullish consolidation, kind of a pennant. All right, I'm hoping we break out to the upside. We'll see what happens. All right, we got conflict over there in the Middle East, so there'll be some dynamic pressure on this product that they sell. All right, so hopefully we get a bullish response to that dynamic pressure that's being put on the LNG market, liquefied natural gas market. So we'll see what happens with that. So I got some of that. I'm currently, I think I'm underwater on both the Hormel. You can see minus 56, and for the Flex LNG right here, minus 355. These are long-term plays, all right? So they're swing trades, not day trades, all right? That's it for me, traders. I'll see you all tomorrow, 8 o'clock. I'm expecting a big dip tomorrow, unless, of course, the Asian session or the European session steal the thunder and they produce the dip without us and then create the bounce, all right? So we'll see what happens tomorrow, but I'm expecting a big dip tomorrow again, so we'll see. All right. Thanks, traders. See you in the morning, 8 o'clock. Thank you, everybody.